Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Nautilus Biotechnology, and let me tell you, it's a bit like watching a stock price walk a tightrope. Will it stay above water, or is it headed for a plunge? We'll find out, and this report is about Nautilus Biotechnology getting a warning from Nasdaq because its stock price has been too low. The company has a limited time to fix this, or it could get kicked off the stock exchange. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for discussing these topics. So, the big news is that on May 1, 2025, Nautilus Biotechnology got a letter from Nasdaq, the stock market where they're listed. This letter says that for 30 business days, from mid-March to the end of April 2025, the company's stock price didn't meet the minimum requirement of $1 per share. Basically, their stock was trading too low. To stay on the Nasdaq Global Select Market, a company's stock needs to stay above $1. That's according to Nasdaq listing rule 544.35 Since Nautilus didn't meet this, they're now in a bit of trouble. Nasdaq is giving Nautilus about 6 months until October 28, 2025 to get their stock price back up. This 6-month period is called the compliance period. Even though they got this warning, Nautilus stock is still trading on Nasdaq, but they have to follow all the other rules to stay listed. To get out of trouble, Nautilus needs its stock price to stay at $1 or higher for at least 10 business days in a row. During that 6-month compliance period, however, Nasdaq can choose to extend that 10-day period if they want to. If Nautilus doesn't get its stock price up by the end of October 2025, they could get another chance. They might be called to get another 6 months, what they call the second compliance period. But to get this extra time, they'd have to move to a different Nasdaq market called the Nasdaq Capital Market. To get that second chance, Nautilus would need to apply for the transfer, pay a fee, and meet most of the regular requirements for being listed on Nasdaq, except for the stock price problem. Possibly by doing something called a reverse stock split, which is a way to artificially increase the stock price. But there's no guarantee Nasdaq will give Nautilus that second chance or agree to keep them listed even after all this. If Nasdaq thinks Nautilus can't fix the problem, or if they don't qualify for the extra time, Nasdaq will let them know that the stock will be delisted, meaning it will be removed from the stock exchange. Nautilus says they're watching their stock price closely and thinking about what to do to fix the problem and meet Nasdaq's requirements. But they also say that there's no guarantee they'll be able to get their stock price back up or meet any of Nasdaq's other rules. Now let's discuss my opinion on Nautilus and the situation. Nautilus Biotechnology is facing a tough challenge with its stock price. Getting a warning from Nasdaq is never good news. It shows that investors aren't very confident in the company right now. One of Nautilus's weaknesses is that they need to raise their stock price quickly. They have a limited time to do it, and if they can't, they risk getting kicked off the Nasdaq. That could make it harder to attract investors and raise money in the future. On the other hand, Nautilus says they're working hard to fix the problem. They're looking at different options like a reverse stock split to boost their stock price. If they can successfully turn things around, it could be a good sign for the future. A big risk for Nautilus is that they might not be able to meet Nasdaq's requirements, even with their best efforts. The stock market can be unpredictable, and there's no guarantee their stock price will go up enough in time. However, there's also an opportunity here. If Nautilus can show that they're making progress and have a solid plan for the future, they might be able to regain investors' trust and get their stock price back on track. In conclusion, Nautilus Biotechnology is in a difficult situation, but they're not out of the game yet. They need to act fast to address their stock price problem and convince investors that they have a bright future. Whether they succeed or not will depend on their ability to execute their plans and navigate the challenges ahead. Alright, that's our breakdown of Nautilus's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.